So here's a question that's probably keeping a lot of silver investors up at night right now. Silver just crashed from $121 an ounce down to $78 in a matter of days. That's a 40% drop that happened so fast it made your head spin. And now everyone's asking the same thing. Is this the buying opportunity of a lifetime, or are we about to see this thing drop even further? That's exactly what we're going to figure out today, because the silver market right now is absolutely wild, and you need to understand what's really happening before you make any moves with your money. Let me start by painting the picture of where we are right now. As of today, February 9th, 2026, silver is trading around $78 to $79 per ounce. Now, if you're new to silver investing, you might be thinking that sounds pretty high, and you'd be right from a historical perspective. But here's what's really crazy. Just 11 days ago, on January 29th, silver hit an all-time record high of $121 per ounce. Think about that for a second. We went from the highest price silver has ever been to a 40% haircut in less than 2 weeks. That's the kind of volatility that either makes fortunes or destroys them. And understanding why this happened is absolutely critical. Now, before we dive into whether this is a buying opportunity, let me give you some context that's going to blow your mind. Even after this massive crash, silver is still up 145% compared to where it was just 1 year ago in February 2025. So we're not talking about a metal that's been doing poorly. We're talking about something that's been on an absolute tear and then hit a wall. The question is, was that wall temporary, or is it the beginning of something worse? Here's what actually triggered this crash, and it's really important you understand this because it tells us a lot about what might happen next. The CME, which is the Chicago Mercantile Exchange where silver futures are traded, raised margin requirements for the 6th consecutive time. Now let me explain what that means in plain English, because this is where a lot of traders got absolutely crushed. When you trade silver futures, you don't have to put up the full value of the contract. You can trade on margin, which means you're essentially borrowing money to control a larger position. The CME increased the initial margin requirement from 15% to 18%. That might not sound like much, but when you're talking about highly leveraged positions, that small increase can be devastating. Think about it this way. If you're a trader who is using maximum leverage, that margin increase means you suddenly need to come up with more cash immediately, or your position gets automatically liquidated. And that's exactly what happened. When enough traders get forced to sell at the same time, it creates this cascading effect where the selling pressure feeds on itself. Prices drop, which triggers more margin calls, which forces more selling, which drops prices further. It's like a domino effect that can turn a normal correction into a full-blown crash. But there's another piece to this puzzle that a lot of people are missing. The nomination of Kevin Warsh as the next Federal Reserve Chairman sent shockwaves through the precious metals market. Warsh has a well-documented history of being strongly against maintaining a large Fed balance sheet, and he's considered a hawk when it comes to fighting inflation. Now let me explain why that matters for silver. When investors believe the Fed is going to tighten monetary policy, reduce its balance sheet, and potentially strengthen the dollar, that's traditionally bearish for precious metals. The dollar and silver typically move in opposite directions, so a strong dollar environment puts pressure on silver prices. So now that we understand what caused the crash, let's talk about the elephant in the room. Is $78 a buying opportunity or not? And to answer that, we need to look at both sides of this story, because I'm not here to sell you hopium or fear. I'm here to give you the real data so you can make an informed decision. Let's start with the bull case, because there are some seriously compelling reasons why silver could be an incredible buy at these levels. The fundamental supply and demand situation for silver is unlike anything we've seen in decades. Right now, the silver market is in what's called a structural deficit, meaning demand is exceeding mine supply by somewhere between 160 to 200 million ounces in 2025 alone. Now, that's not a one-time thing. This has been building for years, and it's getting worse, not better. When you have consistent demand outstripping supply, basic economics tells you that prices should rise over time. But here's what's really interesting about silver compared to gold or other precious metals. Over half of silver's demand now comes from industrial uses, not investment or jewelry. And this is where the story gets really exciting for long-term investors. Solar panel manufacturing alone is expected to nearly double its silver consumption between 2020 and 2030. Every solar panel needs silver for its electrical conductivity, and as the world transitions to renewable energy, that demand is only going to accelerate. On top of that, you've got electric vehicles, 5G infrastructure, artificial intelligence data centers, and countless other technologies that require silver. This isn't speculative demand that could disappear overnight. This is real industrial consumption that's baked into the global economy's transformation. Now let me give you some perspective from the big players in the market, because their analysis matters. JP Morgan, one of the largest banks in the world, has put out a forecast suggesting that silver has a floor around $75 to $80 per ounce this year. We're literally sitting right in that range as I'm speaking to you. Their analysts are essentially saying that based on the fundamentals, silver shouldn't drop much below where we are now. Goldman Sachs, another heavyweight, maintains that silver has significant upside potential from current levels, though they're also warning investors that volatility is going to remain high. So you've got major institutional players who aren't calling this a top. They're seeing this pullback as potentially part of a longer-term bull market. There's also this fascinating dynamic happening between the paper market and the physical market that you need to understand. While futures traders were getting liquidated and selling like crazy, physical silver dealers are reporting steady demand for coins and bars. Retail investors and collectors are actually buying on this dip. Think about what that tells you. The people who want to own actual physical silver, the stuff you can hold in your hand, they're not panicking. They're accumulating. That disconnect between paper and physical markets often signals that the paper market is overreacting to short-term technical factors, while the physical market is focused on long-term value. Let's also talk about the gold to silver ratio, because this is something experienced precious metals investors watch closely. Right now, that ratio is sitting around 64, which means it takes 64 ounces of silver to buy 1 ounce of gold. Historically, when this ratio gets too high, silver tends to outperform gold as it plays catch-up. We've seen the ratio go above 80 in the past, but 64 is actually suggesting that silver is reasonably valued relative to gold. Some analysts argue that if gold continues to perform well, silver should follow and potentially outpace it on a percentage basis. Now, if I only gave you the bull case, I wouldn't be doing my job, because there are legitimate risks and bearish scenarios you need to consider before putting your money into silver at these levels. The first and most obvious risk is that the volatility we just witnessed could get worse before it gets better. We're heading into the Chinese Lunar New Year period from February 16th through the 23rd, and during this time, Asian markets thin out significantly. When liquidity drops, price swings can become even more exaggerated. A piece of news that would normally move the market 2% could move it 5 or 10% in thin trading conditions. So if you're thinking about buying right now, you need to be prepared for the possibility of some wild price action in the next couple of weeks. There's also the bearish scenario that involves the US dollar strengthening significantly. If Kevin Warsh takes over as Fed chair and implements more hawkish policies than the market expects, if the dollar rallies hard, silver could face serious headwinds. Some analysts have mapped out a scenario where silver could drop into the $60 to $70 range if the dollar really takes off. Now, I'm not saying that's going to happen, but it's a risk you need to be aware of. The relationship between the dollar and precious metals is real, and it can override supply and demand fundamentals in the short to medium term. The margin requirement situation is also something that could continue to create problems. The CME has now raised margins 6 times in a row. What's to stop them from doing it again if they think the market is getting too speculative? Each time they raise margins, it puts more pressure on leveraged traders and creates the potential for another wave of forced selling. If you're buying silver, you need to understand that the futures market dynamics can create price movements that have nothing to do with whether silver is fundamentally valuable or not. Here's something else to consider. Even though we've got this structural deficit and growing industrial demand, those things take time to play out in price. Markets can remain irrational longer than you can remain solvent, as the saying goes. The fact that silver should be higher based on fundamentals doesn't mean it will be higher next week or next month. If you're buying at $78, you need to have a time horizon that's long enough to weather potential short-term storms. Now let me explain the difference between paper markets and physical markets in a way that'll help you think about your own strategy. The paper market, where futures and derivatives trade, is much larger than the physical market. When big institutions and hedge funds trade silver futures, they're often not interested in actually taking delivery of physical metal. They're trading the price movement. This means the paper market can become disconnected from physical reality, especially during periods of high speculation or forced liquidation. The physical market, on the other hand, is where real buyers and sellers of actual silver meet. When paper prices crash but physical demand stays strong, that's often a sign that the crash is technically driven rather than fundamentally driven. So where does all this leave us? Is $78 a buying opportunity? Here's my honest assessment, and remember, I'm not a financial advisor and you should always do your own research and talk to a professional before making investment decisions. But based on everything we've looked at, I think the answer depends entirely on your situation and your time frame. If you're someone who's looking to invest in silver for the long term, meaning you're thinking in years, not months, and you believe in the industrial demand story and the supply deficit story, then this pullback could absolutely represent a solid entry point. You're buying at a 40% discount from the peak, you're getting in near what major banks think is the floor, and you're positioned for what could be a multi-year bull market driven by real industrial consumption. However, and this is critical, you need to size your position appropriately. Don't bet the farm on this. Don't use leverage. Don't invest money you might need in the next 6 months. The volatility we've seen over the past 2 weeks is not going away. This market can swing 10 or 15% in a single day. If you can't handle watching your investment drop 20 or 30% without panicking and selling at the worst possible time, then you either need to invest less or sit this one out entirely. Position sizing and risk management are everything in a market like this. If you're more of a short-term trader looking to make quick profits, I'd be very cautious right here. We're heading into a period of thin liquidity with the Chinese New Year coming up. We've got uncertainty around Fed policy, and we've got a futures market that's shown it can turn on a dime. Short-term trading in this environment is possible, but it's extremely risky and probably not suitable for most people watching this video. Let me give you a few scenarios for what could happen next, because I think it's helpful to think in terms of possibilities rather than predictions. In the bullish scenario, silver consolidates around this $75 to $80 range for a few weeks or months, building a base. And then when the technical picture clears up and the forced selling is completely done, we see a resumption of the uptrend. Industrial demand continues to grow, the supply deficit persists, and over the course of 2026 and beyond, silver grinds higher and eventually makes new highs above 121. In this scenario, buying at 78 looks brilliant in hindsight. In the bearish scenario, the dollar strengthens more than expected. Warsh implements hawkish Fed policies, maybe we get more margin hikes, and silver breaks down below the $75 support level. We could see a move into the 60s or even 50s if the selling gets really intense. In this scenario, buying at 78 means you're going to be underwater for a while, possibly a long while, and you'll need serious conviction and patience to hold through. And then there's the sideways scenario, which honestly might be the most likely in the near term. Silver could just chop around in a range between $70 and $90 for several months, digesting this massive move we've had over the past year. Markets need time to consolidate after big runs, and silver has gone up 145% in a year. A period of sideways consolidation wouldn't be surprising at all. In this scenario, buying at 78 is fine, but you need patience because you might not see meaningful gains for a while. Here's what I want you to take away from this. The silver market right now is presenting both an opportunity and a risk, and which one it turns out to be depends on factors that none of us can predict with certainty. What we can do is look at the data, understand the fundamentals, be aware of the technical and macro factors at play, and make informed decisions based on our individual circumstances. The fundamental case for silver remains strong. If you found this analysis helpful, do me a favor and hit that like button, and if you're not already subscribed, subscribe and turn on notifications because I'll be following this silver story closely and updating you as things develop. And here's what I really want to know. Drop a comment below and tell me, do you see this as a buying opportunity, or are you waiting for lower prices? Are you already in silver, or are you sitting on the sidelines? I read every comment and I love hearing different perspectives, so let's get a conversation going. And remember, always do your own research, never invest more than you can afford to lose, and consider talking to a financial advisor before making any major investment decisions. Thanks for watching, and I'll see you in the next video.